again, let's go through like what happens. Maybe I'll ask myself some questions at this point. You as a seasoned veteran of the short selling craft, Keith, what would you do? Let's start with what you shouldn't do. Okay, let's start with let's have a to-do list on what you shouldn't do, because those of you that just got squeezed or blew up, whatever, it's over. It happened, right? It's just like whatever. Marriage blew up, go find another one, or don't. It doesn't matter. Like, you got to get on to the next play. So next time we have the biggest rate of change acceleration in GDP growth, inflation, and U.S. corporate profits ever, and ever's a long time, let's respect that. Let's just write down short selling rule number 1, right? Short selling rule, and I would say that I've probably made more short sales than most people, certainly anybody that talks or rants like I do. I've been doing this for a long time, right? I have rules because you are set up to lose money. Don't forget, right? You're going to lose money over time, and if you don't, you're not going to be a good short seller. Now, order of magnitude, let's just be clear. I've not lost the kind of money that some people are going to lose on some of these shorts. But one, if we are in quad 2, these are all if-then statements, okay? I shall not short high short interest stocks. I'm not going to do it, especially if they have a rate of change acceleration. ROC, rate of change, is going up. Let's have that one down. All right. Point number 2. If I'm so smart that I'm going to ignore rule number 1, let's go to rule number 2. If I'm going to ignore this rule, all right, which I would say I shouldn't really do, okay? But if I so chose to do it, because I'm so smart, my analysts and I are really smart, we're going to ignore that, then I would probably think about like 10 days to cover, something like that. Like 10 days to cover. Like if it takes you more than 10 days to cover your short position versus the average 10-day volume, so again, it's versus average volume, you're too big in that. Yeah. You can't get out. So you shouldn't be going there anyway, and when you get in there, you can't get out. Like, I don't think I need to start the short selling school of hard knocks here in Stamford, Connecticut, but that's a good start of the curriculum.
I guess the other thing too is you wouldn't have shorted it to begin with if it was bullish trade, right? Which is
there are a whole host of other things. I mean, like if it's bullish trade and trend, don't short it. If the Hedgeye analyst likes it and it's bullish trade or trend and short it, don't short it. Like there's a whole bunch of things that conditionally you absolutely should not have been involved in that, right? Okay. So, and again, we're going to learn from other people's mistakes in as much as our own. I've made some of these mistakes, but there are a lot of rules that I have that stop me out of making my own human mistakes. That's really what it is. It's a really tough thing to do, and it takes a lifetime to do it.